Hey everyone, welcome back to Noodlenomics. So today I'm going to walk you through kind of the updates I've made to my budget. I know that it has only been like a week or so since I really fleshed out the other one, but as I've been kind of playing around more in YNAB and also figuring out, what makes sense for me and how I want to look at my budget on a regular basis, I decided to make some tweaks. The main one being that instead of tracking my high yield savings accounts where I hold specific funds like emergency fund or new car fund, etc., off budget, I have added them on budget and actually assigned out that money to the correct category. And that's mainly so that I can, set a goal in the category that's the larger amount that I want to save and see the progress bar complete. It's just the way that my brain seems to be enjoying or viewing the information in front of me, and is actually bringing me more peace of mind than I thought it would. So I think for me right now that's gonna work. I know there's multiple ways of doing this. Lots of people say that once you really are in the weeds in YNAB, you may not need an emergency fund. I talked a little bit about that in my last video where I shared, some different strategies for how one can start building an emergency fund, and then also, briefly mentioned, right, the larger kind of YNAB concept of aging your money, etc. So I still keep my funds in a high yield savings account because why not? It should grow and just make some interest while it can. Those rates will change if the Fed changes its rates, but that's okay. For now, it's, getting passive income every month. So I'm going to take advantage of that. If things change or they drop down crazily, maybe it won't make sense, and maybe it'll make sense to just keep it all in one place. But I think just given, the events of the last few years in terms of the job market and such, I feel more comfortable having a dedicated emergency fund specifically for being able to cover, 3 to 6 months of expenses if there's any job loss or things like that. So that's the plan. I just wanted to kind of quickly share that, but I'll also walk you through how I've updated my budget. So right now, the money bag of holding has stayed the same. I assigned my last paycheck, into this paycheck holding account. I'm not yet comfortable with the whole, if you funded everything in this month, just move to the next month in YNAB and assign the dollars out. So I'm going to keep it here. I get one more paycheck this month. So once I get that paycheck, then it's typically towards the end of the month anyway. So I can then pull it out and start assigning towards February. I mean, all the money is already sitting in my account. So I'm not worried that, say my mortgage will get pulled out on the 1st. I have enough money in my checking account to cover that bill. YNAB may look a little, janky in February if that pulls out first and I don't go into YNAB till the 2nd to assign out the money, but that's okay. I shall figure it out. So money bag of holding is staying the same. My credit card payments, these are green, which basically just means that any money that's kind of in the activity here has been already assigned out in one of the categories below. And then my student loan payments, so I actually broke them up by which student loan it's for. I think in my older category setup, I had just one line item for student loans, but this actually is the way that I'm tackling this debt a little bit in the avalanche method. So this student loan has the highest interest rate for me. So I am putting, the extra $600 of the total amount into the student loan to pay it off faster. And then once that's paid down, then it will roll into the next one and then the next one accordingly. And so, yeah, it's just easier for me to kind of keep track of things, also because they are broken out, you know, from my student loan provider. In this way, I don't necessarily trust the way that student loan providers work all the time. So I am pretty meticulous about making sure that the money has been assigned to the proper account. You know, when I check like after they take the money, to make sure that the transactions got applied to the correct principal or interest amount, whatever it is. So this is just a little bit easier on my end to kind of do that reconciliation that I do. All right, so after that, we go into my house. So here's where you'll see like the first kind of change that I was mentioning regarding my high yield savings accounts. So these three categories, which are my home insurance, and my 2 property tax bills, I save monthly into a high yield savings account that is now on budget. And that's because I only have to pay this home insurance annually, and I pay my property taxes twice a year. However, this bill, I don't actually know what the amount will be until like the summer. So the way that I budget is I think about like what was my last year's bill, and put in a little bit of extra buffer to cover any increases in property taxes that might occur. And then that way I'll start setting that aside. And the reason I've also broken it out like this is because right now I have this total already, you know, set aside in my high yield savings account. Sorry for that extra line. But I have this total already set up in my high yield savings account. So basically what that means is once I pay this on March 1st, right, whatever I'm setting aside monthly will then just get put towards this line item. And that just helps me and my brain think a little bit easier, like better about making sure, right, that I have the money that I need to pay this property tax bill in November. So those are the big ones here that I changed. I don't think much has changed in must-haves. Yeah. And then similarly, nothing has really changed here. So this is a new category for me, specific gifts. I know that literally right above it in the Generosity Becomes Me, I have one called Making Others Smile. And I could assign these dollars, you know, every month into the specific gifts, and I might do that in the future. But right now I wanted to just make sure that I remember it, and I've kind of thought about what I want to buy for specific people in my life, you know, with their upcoming birthdays. So I went ahead and like did some research on, you know, what I want to buy my dad, my sister, my mom, and my nibbling. If you don't know the term nibbling, it's just a gender neutral term for niece or nephew. So anyway, I have, you know, important people in my life that I want to buy things for, and I've thought about what I would like to buy them, and by which month based on their birthday I need to buy it. So I've put them in the order of like when things are needed, just so that it's a little easier for me to make sure, right, that I'm funding them in the right order, and the money is there by the time I actually want to buy the thing for them. If there's a sale or something like that, I could always use the funds that end up being saved in this to cover it. But this is just a good way for me to keep track of and think about, you know, for me it's not just important to like use my money for myself and like my own goals, but part of my goals is to really like be generous with the people in my life that I care about. So there's some other people that I need to add to this list, some friends and things like that. There's a couple like, you know, weddings that I need to go to this year, so I might add like a wedding gift line item just so that I'm tracking towards it. But yeah, that's the change that I've made there. Don't think anything changed in living my rich life other than of course, so this adventures out there, I do have like a travel high yield savings account. So every month once this by the way is the target column now, so don't get confused. There's only 81 cents assigned here because I already used the $4.50 that I needed to use this month on a plane ticket that I bought earlier, so I didn't like reassign it in the column because it's left the account. But this 81 cents is like what I have in that high yield savings account when I'm recording this right now. So in February when I assign, I will obviously put it in the assigned column, but on my budget, you know, this will start filling up, and in my bank account I will transfer that $4.50 into the high yield savings account. But the nice thing is, because it's an account that's on my budget, it won't show as a like payment or outflow, right? It'll just show as a transfer. So that's the nice thing about now tracking some of these things that I'm a little neurotic about in terms of like keeping things in very specific funds. For some reason, I mean, they all earn the same interest because they're all at the same bank, but it's just, again, I think a remnant of having lower paychecks earlier in my life and like needing to be very meticulous about making sure I had money saved up for the right things at the right time. So it's working for me still, and yeah, I'm just gonna keep using this method until it doesn't serve its purpose anymore. Cool, so that's living my rich life. Let's jump into wealth building. So this is where, again, I have put these actually on my budget as well, these accounts. So they are not tracking accounts because I'm not showing like this money going into my actual investment accounts. Rather, I assign the money and then I actually transfer this into a high yield savings account, and then will fund, right, my Roth IRA and my brokerage or stocks, whatever I need to do from that. And the reason for that for me is because there's certain limitations with my Roth IRA, so I need to kind of be careful with how much money I'm putting in there and the way that I'm doing that. And because of that, it's easier for me to do like a bulk investment towards the end of the year than it is to do this monthly and have to do some like finagling on a monthly basis. So I just let it sit in a high yield savings account, and then once a year I go and put all of that money into the investment account that I use. Okay, and then the last one where I really like made some changes, again, mainly because I love seeing this green line. I want it to fill up, this green bar rather. So these are dollars that already belong to me. I have them in a high yield savings account. They have specific purposes. And so I have about, you know, $9,000 saved towards a new car payment, down payment, whatever in the future. So when I hit my threshold here, that'll be fully funded. And then similarly for my rainy day readiness. So this is kind of like that job loss category, big medical expense, something happens to my house, etc. I would pull from this first. So I have put in like how much my target is per month here. because these targets are based on when I want to have this thing funded by. But these are like what I'm willing to like put towards that category every month in order to still achieve other things on my budget. So I've just reminded myself of that here. And yeah, that's for now how it will work. Okay, and I don't think there's anything else that changed. So thanks for joining me and watching me give you a quick update on kind of the reasons behind why I decided to try this new tracking method of keeping my, high yield savings accounts on my budget. Let's see if it works out in the long run. Maybe once I pass a few more months in YNAB, I might decide that's no longer the way I want to do it, but I'm going to try this out, stick with it, and see, how it helps me make different decisions or helps inform the decisions that I decide to make when I'm going through month by month and, spending money on certain things. Thanks again for joining Noodlenomics. Please hit that like button, subscribe, get notified when I post new content. And as always, I'll see you on the next episode of Noodlenomics. Take care.